I'd like you to imagine we're easing into today's market reflections, drawing in a quiet exhale, letting the numbers settle softly, and gently begin. The day gently closed, with the S&P 500 inching upward, touching yet another all-time high at 6,468.54, adding a mere 1.96 points, or about 0.03%, practically a whisper from yesterday. The Dow Jones ended nearly unchanged, easing down by just 11.01 points to rest at 44,911.26. Again, less than a breath. The Nasdaq followed suit, dipping only 2.47 points to close at 21,710.67. A subtle shift in the vast digital landscape. We find ourselves in a moment of stillness in the market. The S&P's soft advance, the Dow and Nasdaq's near flat posture. They feel like gentle ripples on a calm lake as inflation concerns hover in the distance. Among the S&P 500's brightest meandering paths today, Intel shone most brightly, climbing more than 7% on whispers of possible U.S. government interest. Eli Lilly followed with a warm glow of about 3.6%, buoyed by price moves in Europe and a promising partnership in AI weight loss treatments. Texas Pacific Land lifted by roughly 3.4% after announcing a new dual listing. On the quieter edge, Tapestry, the owner of Coach, tumbled more than 15% despite reporting solid profits, as its outlook dimmed under the weight of tariff-driven pressures. Amcor slipped nearly 12%, winding down on operational headwinds, and the trade desk eased around 6.6% as softer partner expectations weighed on sentiment. In the realm of earnings, Cisco Systems stood out with a gentle elevation. Adjusted Q4 earnings of 99 cents a share, ahead by 14%, and revenue climbing 8% to $14.7 billion, helped along by a healthy $800 million in AI-related network infrastructure orders. Though its guidance was steady, the numbers felt reassuring, like a steady heartbeat. Deere & Company presented a more somber note. Its Q3 net income settled at $4.75 per share, ahead of the $4.63 expected, and revenue came in at $10,360 million. Yet it pulled back its upper profit forecast, a concession to tariffs and softer demand, and its shares surrendered over 6% of their value. Despite the quiet achievement, the mood remains cautious. Meanwhile, the new crypto exchange, Bullish, surged nearly 10% further today, after an explosive debut yesterday. Its energy remains high, even in our calm narration. Turning to economic rhythms, today's producer price index came in hotter than expected, a 0.9% rise for the month, marking the most vigorous wholesale inflation in 3 years. Core PPI now stands at 3.7% annually. That unexpected warmth has investors reconsidering the likelihood of aggressive rate cuts, still expecting a 25 basis point move in September, but less confident about big easing to follow. Jobless claims softened, with fewer new filings, further clouding the outlook, and Treasury yields edged up, lending a slightly cooler tone to rate hopes. We also witnessed market-moving currents beyond domestic shores and headlines. The inflation surprise quietly shook confidence in the pace of Fed easing. Global appetites lingered. Geopolitical watch settled on an upcoming Trump-Putin meeting in Alaska. Trade and tariff narratives, especially affecting automotive and consumer goods, cast longer shadows across earnings whispers. Small cap stocks slipped, while mega caps and big tech gently held the market afloat. So, as the curtain closes on today's market, let's pause and breathe in what's just unfolded. A record-setting S&P perched high with microscopic movement. Mixed performance across sectors, anchored by a strong Intel and gentle Cisco. Tariff-tinged pressure muting Deere. Inflation's persistent hum, casting doubt on rate cuts, and the intangible weight of global trade and policy in the background. Take a nourishing breath in. Let the pace slow. Feel the tranquility of this market moment, and know that tomorrow will return to these calm currents, ready to navigate them anew